A lot of people are worried about the Bitcoin price. A lot of people are worried about the trajectory of the overall cryptocurrency market. At the same time, a lot of people are expecting banks and institutional investors to get involved in Bitcoin and to get involved in a big way. In 2018, we're expecting a lot of new players to get involved in the space. Let's discuss. Hey everybody, I'm Gary Palmer Jr., you're you, and together we are Minting Coins, your trusted source for crypto news, interviews, and ICO reviews. Thank you for showing up. Hit that like button. It really supports us and it helps other people find this content. Also, if you have any questions or comments, leave those in the comments box below so your voice is heard as part of the community. In today's episode, we are talking about big banks. We are talking about the price of Bitcoin. We are talking about the future of blockchain as it continues to seep into our world, to penetrate our world, and really prepares itself to flip everything upside down. How we work and interact with each other on the internet, how we work and interact with each other with legal means, contracts, buying homes and cars, and how we do everything in the world moving forward dealing with money. A lot of people might not believe that. A lot of people might think that Bitcoin is not going to get very big, it's not going to get very popular. Well, a lot of people said the same thing about the internet in the 1990s, even into the 2000s after the dot-com burst. People thought the internet was just a fad. They didn't see a future where everyone in the world would have a computer, everyone in the world would be connected to the internet, and everyone in the world would be sharing pictures of cats and what they ate for food that day. And with that, they are just blinded about the opportunity, blinded about the possibilities, and really blinded by the facts of what is actually happening in the world all around us. The price of Bitcoin hasn't been doing too well since it reached that all-time high in December, and then we've been seeing time after time over the beginning of this year, 2018, the price of Bitcoin stumble and fall. Well, in the beginning of January, we had people who are normally selling in Asia, getting ready for gifts and the new year. Then we have all sorts of reasons why people are selling. Some of them are selling to take losses for their quarterly taxes. If you pay quarterly taxes, then you may understand this. You want to show some losses on your books to offset the amount of tax that you owe. So a lot of people are selling in the month of March before the end of the first quarter. And then we're going to have additional people who are going to be selling in April to pay off the taxes and to pay off some of the bills that are happening right now. Then there is speculation that's talking about consensus. There's a consensus conference with CoinDesk. And last year when we had that consensus conference, that's when we started seeing the price of Ethereum really explode. We have all of these billionaires, all of these institutional investors, and these folks are intelligent, they've built wealth, and they're not going to lose their wealth on bad bets. And so where their money has been going into is into Bitcoin, and where their money has been going into is into Ethereum, and they're going to continue supporting these technologies which have captured their investments, which they are building new businesses and new infrastructure on top of. And we can bet, in our opinion, that they're going to continue these investments into these specific technologies. And as we start to get through this bear cycle that we're currently in, for all we know, they could be using this as an opportunity to lay the foundation, lay the groundwork, so that as the cycle does come around, as the Bitcoin bear market turns into a Bitcoin bull market, they're going to be well positioned to take advantage of the liquidity, to take advantage of the trading, and to take advantage of all of this new interest that's going to be coming in, not just from the institutional investors, but from all of the people who are going to follow the crowd and are going to be throwing their money into Bitcoin because they're going to be hearing a lot about it. We have free meetups in Rochester, New York. We've been having free meetups weekly or monthly meetups, for the past year. And we see a very clear association between the price of Bitcoin going up and the amount of people coming to the meetups to learn more about it. And there's so many people who wanted to purchase Bitcoin when they heard about it at the all-time high. $20,000. Some people mortgaged their home. And now that it's all the way down to around $6,000, $7,000, those same people are nowhere to be seen, nowhere to be found. They're worried that Bitcoin wasn't really a real thing. And surely as the price goes up, there's going to be people who are going to be wishing that they could have taken a hold of this opportunity. And we just don't know if and when it's ever going to come back again. A lot of very smart people involved in this space are expecting to see the Bitcoin price around $40,000 to $60,000 by the end of the year. In our opinion, that's entirely possible. And if we see banks rush in, if we see institutional investors rush in, if we start seeing the infrastructure and groundwork laid down across all aspects of our lives, then it's going to increase the flow of cryptocurrency into these different markets around the world. So what we're expecting to see, I'm expecting to see development in business, development from the banks directly, development from the regulators, developments from the government in terms of taxes, working with the regulators, working with the business owners and operators to protect as many people as possible, and at the same time, make sure that the governments and the regulators are getting the taxes paid, making sure that there aren't illegal activities happening with the cryptocurrency, making sure that the United States citizens and companies are following the anti-money laundering laws and know your customer laws. Now, those concepts might be outside of the world of blockchain, but they're still very, very real inside the nations, the fiat-based nations like America and China and the United Kingdom. But these two worlds can coexist. These two worlds can create this new world where we have blockchain technology that allows businesses and people to flourish and to take advantage of not just the monetary aspects of what's happening in our world, but what's happening with this smart contract technology, with creating new ways of agreements, new rules of dealing with each other, dealing with businesses in decentralized ways. These are just very exciting times, and we are very, very excited to see what unfolds through the rest of 2018. So with all that being said, let's take a peek at some of the news headlines and let's discuss. So first off, I want to talk about this April Fool's Day prank from Vitalik, who posted this EIP on GitHub talking about a maximum hard cap with 120 million Ether ever to be produced. Now, this was half of a joke, and this was half of a not a joke. Now, me personally, I'm not a big fan of April Fool's Day, and April Fool's Day jokes is not something that I like to participate in or to really push out there. But a lot of news came out, as it always does, on April 1st. And I just hate reading the news on April 1st because it seems like every other article, maybe more, is an April Fool's Day joke. And so it's really difficult reading the news. We read all sorts of things yesterday, like Facebook was going to create a Facebook coin. That was an April Fool's Day joke. And we saw that the creator of Bitcoin, Satoshi Nakamoto, was discovered and arrested. That was an April Fool's Day joke. There were just all sorts of these April Fool's Days jokes that a lot of you guys love it. I'm not a big fan. I saw this one from Vitalik with the EIP that he posted, and a lot of people were thinking that it was a joke. A lot of people weren't sure if it was a joke, and it turns out that it was a meta joke. It was a joke based on something that wasn't a joke, that was based on something that could be a joke, and I know that's really confusing. And so essentially what Vitalik was saying is that for those still wondering whether or not the specific EIP was a joke, this is EIP 960, he said that the point was seeing people argue about whether or not this proposal was real. As sort of his thinking into this, his joke, his laugh is getting people to argue if it was a real joke or not. But really the joke is that if people think that EIP 960, if the community, as Vitalik says here, if the community wants a fixed supply, and the people believe that EIP 960 is a good way to achieve that, then it should be adopted. And so the joke that he put out there, he says, is in some ways very, very real, because if a joke happens on a blockchain, and if that joke, whether or not they know it's a joke, gets consensus, then that joke is going to be no longer completely a joke, because it'll be completely real at that point. And so it's definitely very interesting, the conversation that this has created, and helping people understand the thinking where you can put something out there and it could be a joke, right? Just like Dogecoin was a joke. The guy just created it as a meme, and now that blockchain won't die. And so this has just been an interesting way to think about April Fool's Day, and this has been an interesting way to think about how some jokes are a lot more serious than others. So in this episode, we're talking about the banks getting involved in Bitcoin in a big way. We're talking about banks and institutional investors getting involved in blockchain technology, Bitcoin blockchain technology, the Ethereum blockchain, and really going all in with the foundational levels of what this technology is going to do so that the rest of the 99% of the world comes into play with this cryptocurrency stuff. The banks, even though Bitcoin has already been around for 9 years and the price is give or take around $5,000 or $10,000 per Bitcoin, they're still going to be in early enough that they're going to be able to create a lot of opportunity for themselves as the new users come in on top of the platforms that they're building. And these new users aren't going to necessarily understand. I mean, I guarantee the vast majority are not going to understand the very basics of blockchain, the very basics of setting up a hardware wallet. And, we could look back at the internet example with this as well. There's so many people who were using AOL. They thought AOL was the internet. They thought that if they sign up for dial-up internet and click on the Internet Explorer icon, that it wouldn't work because they actually had to open up AOL for the internet to work. And so that's going to happen in this new world where people are going to think if they want Bitcoin and the blockchain, they're going to have to use some other system. And it's just the way of the world that not everyone understands everything equally. That's going to give the banks this huge opportunity to profit. That's going to give you a huge opportunity as well, as you have a deeper understanding of this technology before the banks come in with their massive marketing dollars and really shift the focus and the narrative into what they want to talk about, and sending people to the websites and the URLs and the tools and platforms that they control. Inside this sort of thinking, and what we were saying earlier with the banks getting involved, institutional investors, governments, regulators, and whatnot, we have the state of Tennessee, which has passed this bill. And this bill is taking smart contracts and allowing smart contracts to be recognized as admissible law according to the Tennessee rules. And so it's interesting that this bill is referring to blockchain as data on a ledger, and that it's immutable and auditable, and that this blockchain technology provides uncensored truth. And so it's really interesting because this bill is allowing for smart contracts to exist in commerce and to exist in all sorts of capacities, online and offline. And these transactions that are going to be using smart contracts will be seen as legal, will be seen as valid, and will be seen as enforceable, even if it uses a smart contract. And it's not just Tennessee. We see very similar bills around the country inside the United States of America. We see bills in Wyoming. We see bills in Illinois. We see bills in Vermont. We see bills in Nevada, as well as similar bills in Hawaii, Maine, Nebraska. All over the country, we're seeing these bills. Recently in Nevada, they wanted to ensure that Nevada has an environment welcoming and startups, inclusive of startups in the blockchain space. And their bill states that if a law requires a record to be in writing, that submission of a blockchain which electronically contains the record satisfies that law. If something needs to be in writing and you put it on a blockchain, that's going to be as good as putting it on pen and paper. It's going to be as good as an email. It's going to be legally recognizable. And this is good for the banks. This is good for the regulators. This is good for the businesses. This is good for the person-to-person transactions that happen in the future, because it's going to say that what happens on the blockchain is law. So while a lot of people right now are wondering, is Bitcoin dead? Is Bitcoin going to continue going down? They're just really uncertain. They are doubting themselves about Bitcoin and where this technology is going. What's going to happen is that we're going to see more and more players get into the space, at least in our opinion, and people are going to see more and more uses of the technology. They're going to see more and more acceptance of the cryptocurrencies. More and more people are going to be inoculated to these words. They're going to be recognizing these terms. They're going to be recognizing that these are new variables, a part of their society. Just like email, right? There were a lot of people who did not get involved in email. There's a lot of people who were not interested in the internet when the internet first came out. Well, you were hearing radio commercials and they said, visit us at www.whatever. And you saw TV commercials that had email addresses on them. And slowly but surely, people became aware of the internet technology, of email technology, of social media technology. And this is going to happen with the blockchain technology as more and more companies are talking about it, utilizing it, putting it into their marketing. You see Bitcoin accepted here logos in different merchants around your city, or perhaps as you travel. People are going to really start to wonder, what is this? Should I have one? And just like it might have taken you or someone that you know a long time to get their first email address or to maybe purchase their first domain name, it's going to help people realize, well, maybe this is something that they want to get involved with. Maybe this is something that they want to learn more about, so they could have a competitive edge with understanding this technology moving forward. Real quick, Russia is going to be accepting cryptocurrency during the World Cup. The hotels are going to be accepting cryptocurrencies during the World Cup. And we know that Vladimir Putin is all in on Bitcoin. He's a big believer in decentralized blockchain technology and the power and control that it gives back to people and governments, which isn't entirely a good thing from the government's perspective, but it really emphasizes that Bitcoin and blockchain technology for everybody has advantages and disadvantages. So in the big headline for today, we have this investor who says that the banks like Goldman Sachs and JP Morgan and whatnot, they're going to be entering crypto. And when they enter crypto, it's going to lead the Bitcoin price to surge. And so this person is John Matonis, and he's a co-founder of the Bitcoin Foundation executive at Visa. And he stated that the entrance of major banks and financial institutions like Goldman Sachs will lead to an increase in the liquidity of Bitcoin, the ability for Bitcoin to be bought and sold easily. And with the increasing of the liquidity of Bitcoin in the cryptocurrency market, this will ultimately also increase the price of Bitcoin, giving more people access to purchase Bitcoin, more and more people taking Bitcoin out of circulation. And as the world moves forward and more people want some of this Bitcoin stuff, there's going to be less and less of it available. And in a market situation, that could put a lot of pressure on the price of Bitcoin to go up. If the demand is high and the supply is decreasing, then that could put a lot of pressure on the price of Bitcoin to go up. None of this is financial advice. We're just learning about technology here. So John goes on to say that he thinks this is fabulous that they're going to be getting in because it's going to bring new liquidity. It's going to develop futures markets, options markets. It's also going to create interest in the rates markets around Bitcoin. And so John is saying that we're used to hearing things about the LIBOR rate and that he's saying that we need the same rate index for the Bitcoin interest rates that he's dubbing as a BIBOR. So if you heard of LIBOR, based on the London Interbank Offered Rates, so it's LIBOR. This serves as the first step, the LIBOR that is, it serves as the first step at calculating interest rates over various loans throughout the world. And so what John is saying is that now we need a LIBOR rate to talk about the interest rate, I suppose, for Bitcoin. And a quick Google search shows us that John Matonis has actually been talking about this Bitcoin interest rate, this BIBOR rate, since at least June 2015. So this prediction by John, I think we've sort of been seeing this happen since 2015. In 2017, we have been seeing the Chicago Mercantile Exchange. We've seen the New York Stock Exchange. We've seen the Chicago Board Options Exchange all get involved with creating these futures markets. We know the SEC is talking with a few different companies about some ETFs, and even stock companies wanting to get involved in the space to help both the institutional and retail investors to get involved in the cryptocurrency. So Matonis goes further on to say that Bitcoin gets described as a bubble, and he says that Bitcoin is not a bubble, but the pin itself that would pop the global financial bubble. So John has stated that the equity markets, the bond markets, and the multi-trillion-dollar bubbles that would inevitably bust in the midterm can and likely will get popped by this sharp object called Bitcoin. So John is quoted on here to say that to the people who say that Bitcoin's a bubble, I would say that it is the pin that's going to pop the bubble. The bubble is the insane bond markets and the fake equity markets that are propped up by the central banks. Those are the bubbles, Machonis added. And so this is really, really interesting because we have this investor who's recognized this. We have this investor who's involved with Bitcoin, this investor who's involved with Visa, this investor who is really paying attention to the current market cycles from the traditional financial world, but they're also paying attention to the Bitcoin space, the cryptocurrency space. And so looking where we currently are with Bitcoin, we are obviously currently in this bear cycle, right? And in a bear cycle or this slump, financial institutions will not be in a hurry to enter the market unless, of course, they want to establish themselves in the forefront of the cryptocurrency development prior to their competitors. So if the financial institutions want to get involved before their competitors, then the bear market is a perfect time for them to do that. Now, these traditional financial companies, are they the type of people who are going to buy stocks when the stocks are at an all-time high, or are they going to sell the stocks when the stocks are at an all-time high? They know how the game is played. I mean, they made the game. They've been making the rules for the past 100 years. So they're looking at the Bitcoin space and they're recognizing that, hey, this Bitcoin thing is getting big. This Bitcoin thing is blowing up. And while the price went up to $20,000 and then all this money left and the price has been going down, this would be a perfect time to purchase into Bitcoin as all the retail investors are wondering if it's a scam, as all the retail investors are being told to go buy some other, new altcoin that doesn't have the technological advancements or the financial backing that Bitcoin and Ethereum have really built up over past several years. And so Bitcoin is at relatively a pretty low. It could go a little bit lower, it could go a little bit higher, it could stay the same, but relatively speaking, what the word on the street is that this is a bear slump. This is a good time for these institutional investors to consider getting into the market, really laying down, staking, solidifying their positions so that as the rush comes back in through the end of 2018, as a lot of people are expecting the Bitcoin price to exceed its previous all-time high of $20,000 and really to try shooting for that $40,000 to $50,000 to $60,000 mark, that's going to be really interesting. It's going to cause a lot of excitement, and we just can't be sure exactly what's going to happen other than that. The only thing that I think we can be relatively certain about is that when this bull market in Bitcoin does come back around and the banks have their positions solid and they're ahead of their competitors at providing products and services for the retail investors, that the current market, the current systems are going to be equipped to handle a lot more volume, a lot more volatility, a lot more liquidity than they ever have before. And what that means with more people having more access to Bitcoin is that could put a lot of pressure on the price of Bitcoin to shoot up if those things happened. Again, not financial advice. Don't risk your money you can't afford to lose and the things that we're saying here. I suppose what's really interesting is that if we take a look at over the Lightning Network statistics, we haven't talked about this in a week or two, but the total capacity of Litecoin has now increased to over 10 Bitcoins. The total number of nodes is over 1,500 nodes. We have over 4,000 channels that are able to handle the capacity of over 10 Bitcoin. And we are just seeing more and more nodes come online literally every single day. So with the Bitcoin Lightning Network being able to handle more and more transactions with more and more of these nodes coming online, at the same time that's happening, the institutional investors are going to be increasing the liquidity of Bitcoin around the world. These two systems coming together could create a perfect storm for Bitcoin to really reach its full potential, becoming not just a deflationary store of value, but also to become the digital cash that was the original vision of Bitcoin so very, very long ago. I guess with that, I have to say that, talking about Bitcoin, talking about BTC, Bitcoin, Lightning Network, blockchain technology, it's not really sexy and exciting to be talking about the same old technology all the time. A lot of people are out there pushing ICOs, they're pushing alternative blockchains, and sometimes they have this financial incentive. There's not really any financial incentive to talk about Bitcoin other than helping the entire market grow overall and just helping our local community the best that we can. Now, granted, it gets really easy to talk about Bitcoin and the rooms fill up talking about Bitcoin when the prices go up. When the prices go down, everyone is looking for something else that's shiny in the moment. And this is just a huge flaw that people have. People are just really interested in purchasing stocks or purchasing things when they're really popular, when everybody has one and when everybody wants one. But the moment it becomes slightly less popular, then there just isn't that same level of interest that there was before. And these sort of things happen in cycles. And so people get caught in these cycles, and it's not fun to lose money. It's not fun to lose Bitcoin. It's not fun to spend more than we have to spend. And so I really hope that as people are experiencing this industry, as they're paying attention and they're starting to put their finger on the pulse, that they start to recognize these patterns, that you and everyone out there is just more careful about who we're trusting, more careful about where we're putting our money, more careful about the ulterior motives that different people have in this world, and really following the money to just understand what are people doing in the world, how are their decisions being made, what are their incentives for saying the things that you're doing and doing the things that you're doing, because that can help create a lot of clarity from our individual perspectives. So with all that being said, I guess I'll throw it back at you and I'll ask you, why are you here? Why are you involved in Bitcoin? Why are you watching these videos? Why are you learning more information? What is interesting to you? And with this information that you're taking in, what is your mission? Well, how are you going to take this information and share it with other people? Or how are you going to take this information and take action? I'd love to know what you think and what your perspective is in the comments box below. So with that being said, thank you for showing up. Again, tap that like button. Again, it really supports us and it helps other people. And until next time, I'm glad that together we are minting coins.